Hello traders, you are welcome to this video and you are welcome back to the Forex Geek channel. So in this video, we are going to be diving into one of the most effective techniques for trading on the 1 hour chart, okay? We are currently on the 1 hour chart of the Euro USD currency here, and we are going to be looking at the moving average crossover strategy. All right, so if you've never or if you have ever wondered how you can use moving averages to get more consistent entry and exit points, then you are in the right place. Okay, whether you have used the moving average before or if you are still new to using the moving averages, then you might want to stick around as we delve into the crossover strategy, which is a very popular strategy used by traders who use the moving averages. Okay, and we're going to be focusing on the 1 hour time frame. Now, before we get started, don't forget to smash that like button if you found this video helpful and subscribe to the channel for more expert trading insights. Alright, let's jump in. So first off, let's break down what a moving average actually is. Okay, so a moving average is a technical indicator that smooths out price data over a specific period, making it easier to see trends without all the small fluctuations. Okay, so basically when you load the moving average to your chart, you're just going to see the trend straight up. Okay, so like in this situation, we can see that the moving average told us that it's a buy trend, it's a bullish trend. Okay, because the moving average is going to be pointing in the direction of the trend, it's going to be going in the direction of the trend, so you can easily observe the trend right at a glance. Okay, now, when two moving averages cross each other on a chart, that's what we call a crossover, because some traders usually use more than one moving average on the chart. Okay, and then the crossover signals occurs when one of the moving average crosses either above or below the second moving average. Okay, in trading, the crossover signal is one that signifies a potential change in direction. For example, when a shorter term moving average, as in this case, crosses above a longer term moving average, it's a bullish trend. All right. On the other hand, when the shorter term moving average crosses below the longer term, then we have a bearish trend. So why are we focusing specifically on the 1 hour chart? Now, the 1 hour time frame is popular among traders because it captures a balance between short-term and longer-term trends. All right, it's a it's a fast strategy that can give you relatively frequent signals without the extra noise you see on shorter time frames like the 5 minute or the 15-minute charts. All right. Now, the 1 hour chart also allows you to react quickly to changes in price, and it still gives you the chance to analyze more substantial trend. The higher the time frame you go, the stronger the trend, right? For example, if you are on the daily time frame, yeah, the strength of the trend on the daily time frame you can't compare it to the strength of the trend on the 15 minutes, right? Because the smaller time frames always obey the larger time frames, right? So as a trader on the 1 hour time frame, yeah, in as much as you still have time frames that are bigger than that, will have stronger trends, you are going to be able to avoid a lot of noise that is found on the smaller time frames while still getting significant price action on the 1